Hey guys, welcome to the Orbit. John and I are testing out the equipment on an upcoming webinar, live webinar series that we're going to begin. And we were looking at Nike, just running a few thoughts and by each other on Nike earnings after the close. We thought it might be interesting to just hit the record button and look at Nike. And so, John, let's go to your screen and Nike. And what are we looking at here?
Yeah, so we've got the 1 month chart up right now. As you mentioned, we got earnings after the close today, and on the 1 day expiry, so expiring tomorrow, June 27th, you can see the expected move is around 7.2%. IV ramped right up at like 167%, and you can see just how dramatic that is if we scrub out on the chart and see how IV comes back in.
And that's a good, John, real quick on the IV, when you went out to, about a month, it's about 50 and change. That a good rule of thumb is that 50 and change vol will probably be 40s, low 40s, maybe 45, depending on what the stock does. So that's a good lesson on the vol collapse. And then it obviously shows how big vol is for tomorrow, although there's only 1 day of premium left into expiration. John, you and I typically start by looking at the condor, and we can, at the expected move, we've got those strikes. We're selling the 58 put and the 67 call, risking about 60 to make up to 40, which is a pretty typical risk reward ratio.
Yeah, so we've set this up to the expected move real quick. That's kind of, as you mentioned, our typical starting point. But yeah, I mean, let's maybe scrub out to the 3 month chart and have a look at some of the things.
Well, this is what we noticed is on that 1 month chart, that looks great. The expected move is outside of those highs and lows. The stock's been trading in a range for a month. But if you do remember, Lululemon just reported and went down 20%. Not that they're the exact same type of company, but they're both in sort of high-end retail apparel. And Lulu not only has gone down 20%, but it's continued lower. And it's now, breaking lows for the year. And, we also noticed this Nike move of last year of the same quarter, and it was down 20%. Not that, history is not an exact guide to what happens, but it is kind of interesting that it was exactly 1 year ago this quarter. And so if you go to that 3 month chart, the other thing that makes me a little bit nervous on just selling the expected move here is it's not really, I like to look in the past and see, where does this expected move line up with? Are there obvious places in the past that this is lining up with? We're a bit in no man's land given all of the volatility over the last couple of months in this stock and the market in general. So I look at this trade most of the time, 70% or so of the time, a stock reports earnings, it stays within its expected move. It is not a big deal. In that case, you've risked 60 to make 40. I would have a hard time going below this risk reward ratio. I would want to be properly rewarded for selling a Nike move, because if this thing moves beyond 7.5%, this thing could be a 15 to 20% move. Therefore, if, John, you and I like to widen trades like this sometimes and to see how that risk reward looks. If you did that and you were getting outside of this 7.5% move and you're risking 80 to make 20, that's the kind of trade that would really make me nervous, because I don't think I'm being properly rewarded for that kind of risk. If this thing moves, 10%, it could move 20%, put it that way. And then the other thing we looked at, John, is, that Lululemon type move. Now, obviously going into an earnings event, playing that directionally via calls, puts, or, very expensive premium wise, we saw that 170 vol. But, even with a put spread or a call spread, it is still expensive. But in this case, especially if you were long Nike and in your portfolio or something like that, you and I were looking at this put spread where it wasn't the at the money put spread, because again, that is really premium rich. We were moving it down a little bit, looking at like, say, the 60, 55. We even looked a little bit lower than that, but we weren't getting enough money to sell that put. This is in this case, we're selling that 55 put at about 30 cents. It's helping finance that 60 put. And then, we're looking at this risk reward ratio. So John, you had some thoughts on this trade.
Yeah, I think this setup is kind of interesting because, as you mentioned, you're risking just over $100 to make nearly 400. Break even is still inside of the expected move. As CC mentioned earlier, it is worth bearing in mind there will be a vol crush after the event. So you are looking for a larger move to the downside. But with everything said in terms of prior recent lows in the stock, what Lulu did, and prior moves to the downside, the setup here really isn't too bad in terms of the risk reward ratio for an outsized move to the downside.
And that's basically it. As with every earnings trade, that iron condor at the expected move, you're going to be right more than you're wrong. But in this case, it was kind of an interesting setup in that we think that if this thing does disappoint or surprise on earnings, it could move a lot more than 7.5%. We wanted to kind of point that out.